Right, so Morgan Stanley has released its 2026 Indian Economic Outlook report projecting a continued Goldilocks environment for the country, powered by strong growth, stable inflation, and improving macro fundamentals. Now, according to the report, the GDP is expected to hold steady at 6.5%, powered primarily by resilience seen in the domestic demand. Also, the report states that the inflation is projected to remain close to the RBI's 4% target through FY27 and FY28, creating room for monetary policy easing. In fact, Morgan Stanley also anticipates a 25 basis point rate cut by RBI in December 2025. Talking about the consumption front, urban demand is showing clear signs of rebound as there was seen a 25% jump in festive season auto sales. Rural demand also remains firm, supported by record agricultural output and rising real wages. The report notes that nominal GDP is set to recover to 10.6% in FY27. In external trade, electronics exports have surged 43%, boosting overall goods exports momentum. However, the United States 50% tariff is expected to affect more than 55% of India's exports to America. Despite this, the service exports continue to perform strongly, with India's global market share now rising to 5.1%. Morgan Stanley expects the current account deficit to remain contained below 1% of GDP, while on the fiscal front, the government has reaffirmed its commitment to discipline, aiming to bring down the public debt around 50% of GDP by the year 2031. Overall, the 2026 outlook signals steady growth, manageable inflation, and a strengthening investment cycle, positioning India for continued economic resilience.